Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Hello everybody, this is Coach D with TackleTrading.com. Wanted to come at you with a quick idea on charting. One of the trades that we've been keeping track of here since last week's Coach's Show is Facebook. And I wanted to talk a little bit about the chart setup here. And one of the reasons we liked that particular trading setup so much is one, that Facebook has broken two all-time new highs. So anytime a stock breaks to new highs, we like that. It's broken out to a new high on pretty good energy. We're seeing it retrace back down with a little two-step move into a very solid support resistance zone down here at 81-ish. Now as the prices come down into that zone, it comes into an area that chartists will oftentimes refer to as the bull area, which is down here below a 13-period moving average and above a 20-period moving average. And although I'm not personally a big moving average fan, it's not one of the things I really base my trades off of. It's really nice to be able to see that come down into that zone, coupled with support resistance. And if we were to drop some Fibonacci's and whatnot, we're sitting on fib zones and everything else. We could also just simply draw up a trend line if you wanted to look at the trend zone ballpark right there. Now, a couple quick things. I've got a MACD and a stochastics on there, and I want to come in. I'm going to edit those settings. Studies, edit studies, we'll get that. And I'm going to come in here to that MACD. The default settings on the MACD, as they were put out there originally by Gerald Appello, were 12, 26, and 9, and I think that's a little slow. I personally prefer to take the moving averages here and put the MACD line at 8, and then for the slow moving average, I like to use about a 17. 8, 17, and 9 are a little bit faster settings, which will give you a little bit more responsive MACD. And then the full stochastics, 14-period setting on the %K, which is the number of days. So what the %K is, it's tracking the closing price over the number of periods we're talking about here, and then %D is a moving average of %K. 14 days is not the typical market cycle. That was the market cycle back in the late 70s and early 80s when this particular indicator was developed. The current default setting should be about 10. This is one of the things I talked about in the newsletter this week. Now let me go ahead and click on OK. And what we'll see here is we got some pretty good confirmation from the indicators with what we're seeing here. Now, a 10-period stochastics is going to be really responsive to price action. And as the prices come down here and we see it drop, we're starting to see that stochastics come down and give us a nice early confirmation, really just on the very first breakout. And then our MACD, you'll notice, is just setting to cross up, but we're seeing it diverge through here with the drop and then the higher low. And so that'll give us a cross as soon as it takes off here. Now, where the stock chart is sitting, when you really sit down and look at this, this is in a pretty interesting spot. One of my favorite spots, actually, which is one of the reasons I created this video, is that we see it drop down A, B, C. That's a typical Elliott wave maneuver. Cha-cha-cha, down into a known support zone. And it broke out to a new high. And if we change our time frames and get down in here to say, here we got a 30-minute or 1-hour time frame, you see it come down and it actually formed a double bottom here at 81. And then we see it break to a new high, and it's currently retesting that old support resistance zone. This creates an ideal opportunity to enter, assuming we get upward confirmation in price. So essentially, this is kind of your breakout move to the upside. You got this little sideways drift in here, and then a breakout to a new high. That's really what establishes that upward trend, is that break to a new high. And then a retracement down into that known support resistance zone. And we're looking for that to take off. Now, this is going to be a little bit contingent on whether or not the market finds some traction and takes off, but I think Facebook's really prime for a trade setup. I've already got some long calls on it and looking for those to pop a little bit longer term. Now, the known target out here, 86, pretty easy to spot. If we drop back out into the daily time frame, and I were to project out how far I think it's going to go, just a basic potential average yield, looking at previous swings pretty easy to say that this thing runs from, say, 73 to 82. We're talking about a 73 to 82, you're talking about a 9-point run. Here from 77 to 86, 9-point run. So if we're popping off of 81, that means we're shooting for 90, another 9-point run. Hopefully this makes sense and is helpful for you. Looking at a pretty good setup there on Facebook. Guaranteed, not a guarantee, void where prohibited, not valid in all states. Of course, past performance does not guarantee future performance, and trading does involve risk, but you got to like that setup. This is Coach D, TackleTrading.com. We'll catch you on the flip side.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.